let's talk a little bit about the Fed. So the Fed came out with their statement yesterday. Oddly enough, I couldn't find my notes for the Fed statement, but they're up here. So they basically came out and they said that they're puzzled. They don't understand why why inflation is so low, but they're basically saying that they're looking to. All right, so we're in reboot phase. So they said they're basically going to keep hiking rates, but they don't understand why. They don't understand why inflation is this low, but they're going to basically continue hiking rates, which I think the market didn't particularly love. Their statement wasn't all that hawkish. It was hawkish, but it wasn't like overly hawkish. I didn't think that there was anything in there to like really take note of, and I had mentioned that. I didn't like, again, that they mentioned asset pricing. I don't like when the Fed comments about the stock market. I think that it's not their field of expertise or place to comment on pricing of assets, but they do this nonetheless. And as much as they want to deny that they follow the stock market, they are definitely tape watchers. It's actually quite pathetic, but that is what it is. Now, my experience with the Fed and my take on how the Fed would react, I don't see them taking any change in their statement, meaning policy change, until there is a 15 to 20% correction in the stock market. They are locked into this course, in my view. The market may oblige, though, if they want to keep up with this. I don't really think that the Fed is communicating well. I think that they've locked themselves in their own box, and they keep basically saying, they're monitoring inflation and growth and foreign issues and domestic. What they really should say is that we're not in a crisis mode anymore, and we're just lifting rates a little bit to take us off of crisis levels because we're not in a crisis anymore. Bang. I don't know why they don't just say that. Instead, they go back and forth with the bullshit, and they leave everyone sort of to their druthers to figure out what the hell they're talking about. So that's my take on the Fed. That I believed in their last statement, and I'm going to stick to this, that they had taken September off the table. And I think that December is what is looking at as a probability of a rate hike. Actually, before I had pulled this up, I had looked at it, and it was over 50%. Now it's in the 47% range. So we're going to see how that plays out with regard to the Fed and interest rates. So tomorrow we have a big, people are mentioning politics and ego. I've mentioned that I think the Fed is political, and I think that they are saboteurs at this point. I think that Janet Yellen and I think Lael Brainerd are resistance type of people, and whether or not you believe that is whether or not you believe that that's appropriate or not, it is definitely not appropriate for the Federal Reserve. They are meant to be apolitical, and I'd be saying that if they were skewed the other way as well. So that's my take. The Fed has also mentioned that they are, talking about unwinding their balance sheet. This to me is completely premature. I guess the Fed wants to do it while they can, not when they have to. I think that their best policy, though, would be to allow some runoff and not do the reinvestment, which I was heartened to hear that the Fed did say, I believe in not this statement, but the one before. And my belief of that is that they're going to use that tool as the way to kind of wind down the balance sheet. I don't know if they're going to do outright asset sales, but they might not reinvest the money. They're still doing basically QE light. A lot of people don't realize this, but as bonds kind of roll off the Fed balance sheet, they've been reinvesting that money, basically doing not new purchases, but keeping the pool full. And I think rather than bailing water by asset sales, they'd be better off just not letting it kind of wind down by either evaporation or sort of a slow hole that drains the pool. And that to me would be the lack of reinvestment or the tapering of the reinvestment. Anyway, the market doesn't seem to love this. The bonds have been selling off quite precipitously. What's, to me, I find very interesting is that the last few sessions, and I think this is possibly the most disturbing part of the I don't know, sideways action to, I guess, pullback we've been having, is that nothing has really been working on the tape other than, a handful of stocks, I guess, in the financials and some bouncing back here and forth in some asset classes. You basically have oil coming down, you have gold coming down, you have bonds coming down, and you have stocks coming down. So everything is basically in sell mode, which to me means they're in liquidation mode. That isn't healthy, and that can lead to larger types of corrections. That being said, we're at some key inflection levels in my view here. The S&P for the first and foremost, I'll go to SPY, I'm of course in a weekly chart. I was going to say this looks a little ridiculous for a daily. Has run a lot. We all know about the Trump trade, the rally, the rally up. And I think that there's been a delay a little bit in the agenda, and I think that people have not been thrilled. Wall Street aren't the most patient people. They usually like to discount things all at once, meaning, everything's going to be great and we're great and we go up every day, or, everything's terrible and we go down every day. So I'm looking at the S&P, and I see that we had a couple of days of ranges that were important, and I've noted those in weekend reviews. That was 6.9 and also 629. So today, the high of day was basically just above the 6.9 low, and we basically closed near the lows today. There was a little bit of a back off at the end of the day. I've been very consistent, though, with moving averages. If we lose 20-day moving average, first of all, if we lose 10 days, we see 20s. If we lose 20s, we see 50s. If we lose 50s, we see 100s. And if we lose 100s, we see 200s. So today was the first day that we had a close below the 50-day moving average. Now, does that mean that we're automatically going to the 100 MA? No, but I would say that it increases the probability of that outcome. Market is always a series of outcomes, and I would say that I put more weight on certain outcomes, meaning in this instance lower to the 100 MA, which is currently 238.54. That would be also just below channel low and close to the 50% fib, which is at 238.31, as higher now that we're below the 50 MA. The market hasn't really fully rolled over. This has been more, believe it or not, as much as some of this up and down action has had. And when you get these 100% retracements both to the downside and to the upside, complex tops are put in that way. That is often same with bottoms, by the way. Complex. Usually you get V. Sometimes there are V bottoms, or once in a while after a big move down, there'll be this kind of up and down. Like in 2011, actually, that was the sort of formed a bit of what I would call a complex bottom. This could be forming a complex top. We'll have to see. It's still to be determined, and there hasn't been really all that much technical damage that has been done. In the very short term, I'm seeing signs of some turning here. We've been having these kind of big intraday reversals, big ranges, and we're now below the 50 MA, and we're testing basically the breakout point now for the second time in only a few sessions. The breakout point, of course, being 240.32. So this area is very key. Now, what I'm watching for tomorrow, we have the NFP, which is sort of like an earnings event for the market. There are a couple of components I'm looking at. Today's ADP, which is the private data roll, was a little short on the actual overall jobs number. We then had an ISM an ISM. I think the manufacturing the other day was I have to look, but today the service was okay, and that was, I guess, a bit of a bright spot in terms of some economic data. It's been from what I've seen, it's been very choppy. The economic data has been pretty choppy. So, but the overall pattern to me is it's growing, but the growth is slowing. The rate of change is slowing down, which to me is I was right. The ISM manufacturing, I just looked it up, was a beat. So we've had now ISM manufacturing and ISM's service as both beats, which are good. My take on this tomorrow is we need to look at a few things in terms of the in terms of the jobs component tomorrow. I'm going to mute somebody. I don't know if I need to. Well, we could either mute or block. So I'm just going to say stop asking me to say things or you'll get the block. And that's not legitimate questions. It's, all right, we're going to block this guy. Hold on. Sorry. Bye-bye. Anyway, let's get back to it. So the jobs component tomorrow, I want to see a couple of things. One, I want to see what the wages are like, if there's wage growth or not. That is the inflation component that the Fed is going to be looking at. I also want to look at the hours worked, the average hourly wages, if people are now becoming more full-time rather than part-timing. You know that I've talked about in the past that the Affordable Care Act, Obamacare, has forced companies into hiring more part-time workers. So that's going to be two very key components, particularly the wages. If there's a big uptick in terms of wage growth, that will be good for the economy, but it will be maybe put the Fed into a decision where they need to start hiking more aggressively. This is also something that I sort of don't understand what the Fed is talking about. The Fed talks out of two sides of their mouth. In one instance, they say that we've been below projection of growth and projection of inflation so long that they're going to allow symmetry, meaning that they're going to allow it to overshoot to the upside in order to make up for the time that they've been below. In the other hand, in the other side of their mouth, they basically are saying, we want to hike now so that we don't have to hike so much in the future. They seem to be so worried about having to hike and make the yield curve very steep at sort of the end part of the game. In my experience, curbing inflation is very easy. You can just hike interest rates. Reversing deflation is a bird of another color, and that is what the Fed is still in the process of doing, reversing deflationary measures. I think Amazon and all this online removing of middlemen has caused some tremendous deflation. It's great for end consumers, but it hasn't met the Fed's mandate for rate hikes, and I think that they need to kind of change their models. They're still working on older models. So tomorrow's number is going to be key. Now, I'll say this. In my experience, the NFP, the number, the market's reaction tends to be in the path of least resistance, as it is on all news. The path of least resistance currently is lower, so I would assume that the market will go lower on the NFP number tomorrow. If it does not, that is important to note. Now, I'll say this, and partially my reasoning for that is the close below the 50 MA. If we don't go down tomorrow, meaning we get back up above and sustain above the 50 MA, I will start thinking that we may fill in the gap and move down to the upper part of the channel. We've had some time below. Today we closed below. And I would then be targeting, for example, my buy stop for a move higher would be above today's high of day, and then I would use a stop below the 50-day moving average. If we have a move up tomorrow to retest the 50 and then fail there, we could then come back down. So the 50-day moving average is very key to me. If we're up early in the morning and we're at the 50 but then stall at the 50, that is a bit of a problem to me. So we're going to have to see how that plays out. Again, we are not in any confirmed down pattern yet. We are not in anything more than a sideways consolidation. This is more, in my view, of a time correction than a price correction. Whether or not we turn into a price correction is going to be very key. Now, I'll say this. If the move is down, and that's the one I wanted for everyone to be the most prepared for, usually markets don't tend to bottom on Fridays. A weak Friday could, depending on how bad it could be, could spill into Monday and Tuesday, and then, of course, I'd be looking for turnaround Tuesday or Wednesday. So that's my plan for that. My plan for the upside would be if we could get above and sustain above the 50 MA, I'd be long, and then I would be adding above the high of day of today for a move back to the upside. For the move to the downside, if you're already short, you could use the 50 MA now or today's high of day, or whatever you want to use as your stop, and then you'd be looking to add to that on a move below today's low of day. We're going to have to see if we have a big true gap tomorrow. Often you'll have a knee-jerk reaction in the jobs data. That's why I put in my poll, which we're going to get to right now, is there often a knee-jerk down and then up, or a knee-jerk up and then down? I'd be curious to see if we did, for example, have a knee-jerk up that stalled at the 50 and then came back down. That could be a little bit troubling. So we have 159 votes so far with 9 hours left to go. The question was, how will the market react to tomorrow's NFP jobs number? Up was 30%, down is 32%, drop and pop, meaning we go down and then up 14%, and then a pop, meaning up and then flop, is a 24%. So if you add in the down percentages there, you're looking at 56%. So more people now are a little bit more bearish. That is that's good. It's actually better to come in. If you're somebody who wants the market to be higher, you're better off with that as being the case. So I'm a little like, if this would have came into me today, like anywhere in the 60s bullish, I would have probably gone out today much more short. If today were to go out like 70% bearish, I probably would have even taken on a small long. I'm kind of neutral here. I've been booking a lot of profits on the pops, and then I've been kind of selling puts on the dips. I've been going in a lot smaller size here in terms of how I've been positioning myself. So I usually do have a tendency to have a bit of a net long bias, but I do have on a lot of kind of short bet plays that are very high return, very low risk, meaning if there's a move up, my longs would benefit from that and my shorts would really not be hurt that badly. If there's a move down, obviously my longs would be hurt by that, but the shorts would do very, very well. So that's what I'm looking for tomorrow with NFP, and I think the 50 MA is going to be the key, particularly if there's a move up. If there is a move up, and it's very possible, we want to see if we can clear and hold the 50 MA. If it stalls there, that's a bit of a problem. If the move is down, if there's like a gap down, a true gap down, we're gonna have to look at the internals to see if they're mild or bearish, to see if there's going to be a gap and go. And the first targets, obviously, in my view, would be the 100 MA and that 50% fib. And then there's, the 61.8 in the gap fill around 236. This is sort of where I think we could potentially go. Like I said, again, if the move is up above the high of day, I think we could see up into the channel high, and I'll post a picture of my chart so people can see. The NASDAQ, QQQ, has been acting kind of squirrely. Yesterday I mentioned that I thought we were seeing fund allocations. A couple of funny things happened in the NASDAQ today that I thought were of note. First, the way the NASDAQ closed, and I'm looking at the NQ futures here, it didn't close on the low of day. The ES basically did. I mean, there was a little rally at the end of some shortcoming or whatever. But intraday, the Qs had a better performance than the S&P. The Qs are also into a very key reference level here, and you have a doji forming in the daily. 135.87 is an important range low, as was 137.47. And it's interesting how the stocks have been responding to these levels very well. It's still very orderly. It's still very technical. It's still above the 100 MA. So I will say this, I think you could use today's range, both the high and the low, as triggers for trading, meaning you could be long above the high of day or short below the low of day. There's a big gap in the NASDAQ down at 132.56, and that was a very prominent area of breakout, which would be sort of my max downside target if we are indeed coming down. The problem I'm seeing in both particularly in the NASDAQ, is that we're now making lower highs on full legs of rallies and lower lows. So until that pattern changes, I've been selling out of my big NASDAQ names. Like I mentioned the other day, yesterday actually, I booked I still think I may have a few on, but they're really kind of, it's small at this point. I booked mostly the end of my short Amazon puts. And I had the other day, a few sessions ago, and I want to go back through this because for some reason, people don't realize that you can change your positions in stocks. just because you're long something, at a low end doesn't mean that you don't book profits at a high end. And I'm talking about Tesla in particular, and thank God this was all time stamped, because I've had like so many people like, oh, haha, Tesla's going lower. I'm like, yeah, I'm not in it anymore, and I talked about it. I don't usually like to play Tesla short because of the dynamics of how that stock is operated, but I don't always have to be long. And today we actually came into one of my targets, big targets that I've been talking about. So let's discuss this here, because this is sort of apropos of what I think has been weighing on the Nasdaq, is these big stocks have had big runs. We talked about getting long this stock when we saw the turn in the move once it broke the downtrend, which I guess I deleted, so I don't have that particular day marked on my chart. But there are tweets that are time stamped, and I mentioned in the weekend video that on 629, that was the kind of the game changer for me. You had these 2 down days, you had this 1 day bounce up, and then once you took out those lows, I didn't stop out immediately, but there was a bounce and there was an IV crush, and then it kind of hung out for 2 days, and I was sort of like saying to myself, let's take a look at those 2 days. You could get, if you want to get back long, you could have a buy stop in over those highs. It never achieved it, and now it's been in sort of like cascade mode. I mentioned that I thought we would see a 100 MA test once we lost to 50 yesterday, and today we stopped right on the 100 MA. Now, there are some interesting, in my view now, the short is not as good. You probably want to be looking to cover into down moves. 303.48 and this 100 MA here is an important area to hold. That's a support. If it is to break through still further, between 287.39 and 291.42 was technically a breakout area, a much larger one. So that is a very key area. And I also could imagine there being some put protection down there, meaning put walls. People are probably all longed up into those 300, so they're probably looking at books and profits in my view down there. The major breakout of this stock, and this is where this is actually around where we started getting more bullish, was 265. I've mentioned that for a long time, that's a very key level. The 200 MA in Tesla has been historically very key, and that's getting close to that area. It's around 258.97. So I had mentioned today that if you wanted to begin smaller size selling out of the money puts, it strikes at or below the 200 MA, near dated. Today was probably the day you might have wanted to start doing that. And if there is any gap down or a big move down tomorrow, I'd probably be looking to do that either same day expiration, meaning they expire on tomorrow's close, or the following week at the earliest. Because at some point, even let's say the stock has topped and it's going a hell of a lot lower, it will be due for a bounce. Now, I want to talk a little bit about the story of Tesla. For me, the story has never been about the great cars they make, and they do make great cars. It's never been about their power walls and any of that. It's always been about 3 simple components. High concentrated insider ownership, meaning Elon Musk and his family own a lot of the stock. It's a poorly distributed stock, meaning it's not owned by a lot of funds. And 3, there's a high short interest. That has, for me, always been the story of Tesla. I don't care about anything else that the company has to do with anything other than, the events that they have or whatever. I don't care about their cars. I don't care about Elon Musk. I care about that dynamic in a stock. These are trading vehicles. They're not anything more than that. Any stock is never anything more than a trading vehicle. So the percentage of the float that's short, I don't know if this is still the case, is 24%. I usually like when it's in the 30s. I also like that the stock is coming down hard and fast, and I love when it does it without bounces. When you have bounces, you alleviate some of the selling pressure, which doesn't make, for our purposes, the put sales as easy to pull off. Because after the IV starts building on the way down, you want it to come off, alleviate. Believe it or not, the bounce play has less to do with the price directional move than it does with the IV crush. And after something has come down hard and fast, that IV is hard. And that's why I like to sell the puts over buying calls. And if you do it with calls, do spreads, because the minute it rallies, that IV crushes, and that crushes the price of the option. So you'd need a really, really big move in the stock up to make it in the calls. That's why I always say spreads, because if you have the spread on, the IV crushes equally, and then you are truly playing in price. But when you have a violent move down with a big bounce up, you not only get the IV crush, but you also have the price going the opposite way. So that people often ask me why I like to do short puts. It's because of that. Yes, you'll make less on the trade, but your probability of success is higher, and I like to take high probability trades. So that is my view on Tesla. In general, a lot of these stocks are starting to act a little bit funny. Like I'm looking at Amazon, and we're going to talk about why I think this is happening in a moment. Amazon is I had said that I thought we were going to be really choppy in a range, and we have been. The key levels I'm watching in Amazon is 965, which we're kind of just sputtering around on here, and the 50-day, which we're also sort of sputtering around. Today was a failure on the 50 MA. So I'll say this with Amazon. If it can't hold 965, the probability of it getting down to, like, let's say 910 increases. That the 100 MA is a little bit higher than there at this point, but that was the earnings low of day, the earnings gap during the earnings day. That was the low of day. So that's sort of like my downside target if we were to lose the last couple of days lows. So I think there's a good trade in Amazon. Against the 2-day ranges here. I think you could be long above the 2-day high, or short below the 2-day low for a right or right out trade entry. One of the things that interested me today with these was they all were very weak early, and then a lot of them even got green for a while, and then only toward the end of the day they got weak again. That to me is a critical factor. Google, if you remember, I was targeting the backside of the old progression line, and we've stopped there now the last 3 days. It held perfectly. So this was an area I had mentioned if you were short to cover a little bit into, and even if you wanted to sell some out of the money puts. Now we've spent here a few days, you probably want to be looking to close those as the same week the IV crush. This has a gap fill down at like 891, and then the channel low is around 865. There was a breakout around those like areas also. So if there is a leg down in Google, probably into that 20-point or 30-point morass, which is also close, believe it or not, to the 200 MA, that area to me would be an area that I'd be looking to maybe start adding some more serious out of the money, short out of the money puts for a quick trade, for an alleviation of the selling pressure. This has been like kind of testing into the gap here the last few days. So I think you could use the last 3-day range, either long above the highs or short below the lows, for a right or right out entry for either long or for short. Another one of the big NASDAQ stocks that has not been looking particularly hot has been Apple. It hasn't completely like rolling over or fallen apart here yet, but it is not looking phenomenal. And below the 100 MA, I've said, could risk a move down to the 200 MA, which is about $12 lower. I do see some reference supports at the 140 level and the 134.54 to 130 strike. So that area is big. So like if Apple were to come down into there, I would be looking to sell some out of the money puts. I think everyone at that point would assume you're going to see the gap fill. I don't think you'd see it right away. I think there would be some type of an aggressive bounce first. So that area to me is very key. 130.75 to 134.54. I like the idea of selling out of the money puts on any further weakness into that zone. The buy point in Apple for me would be if this bear flag that it's sort of forming were to fail. You had to look above and fail. We're now back down to the range low, all acting normally. So you'd need to see it clear these sort of range high, fill the gap, and then kind of start lifting back up above this sort of 148s. You need to kind of clear 148s. So we covered Tesla, we covered Apple. I think one of the reasons, and now we're jumping a little bit back into macro, that these have been falling is because of what they key off of. And a lot of that has to do with the interest rates, bonds. Bonds have been, they had a gravestone doji, a morning star, whatever you want to call it, and now that was basically right short of the channel high, and now we're right down. Today's low was to the channel low, like to the tick. And I had said that a retest of the breakout was probably in the offing, which was 123.15. I now have a call spread on, trying to play for a bounce here. If it doesn't work, it doesn't work. You can't win every trade, but this is a high probability setup, and I'd probably use the 100 MA as a stop, which is a little bit below. If we can't hold the 100, I'd probably be out of the trade. If we get back up above today's high of day, I might even consider adding to it for a bounce back up, maybe to like 125 would make some sense to me. Maybe even 126s, possibly. So that's sort of my trade. This is an important gauge because interest rates are what the Fed, that is the Fed. I mean, if interest rates are rising, that is not good for the market. It's not good for the PE multiple, particularly on big NASDAQ stocks, and I think that's one of the reasons they've been under a little bit of pressure. Also, they've been the only game in town for so long that I believe that people have piled so much money into them because there's been no other way to make any money in terms of growth stocks. These are all stocks that kind of don't need a solid economy to grow. And that's why you saw that when the last time you saw them weak was when people were piling into that kind of like the reflation trade. So, which is also sort of stuttering a little bit. Oil is going to be key again. If you notice the rally today in the market, it was like almost tick for tick with oil. It wound up closing rather weak, and there's a 10 and 20 MA moving average confluence a little bit lower at like 44.73. That area is very key for this to hold, for this to kind of stay okay. Yesterday was a big day in oil. It was a bit of an outside day. You had a look above and fail and a move back down, and it closed sort of all right, but not great. The problem with oil, I think, was that it had just run a lot, and people were looking to sell at the 50 MA, and now it is it stalled there a little bit. So for me, for oil, if you want to be long, wait for it to clear either and hold the 50 MA. I'm not in the opinion that I think oil is going to be a complete disaster. I mean, I think maybe 35 to 37 would be like kind of my max downside in a really worst case scenario, but that's sort of my my opinion there with that. As for other macro factors, while we're talking about them, the dollar has been getting smoked. I still have my buy order sitting in at 24.47 in the UUP. We may take a little heat on that initially, but I think ultimately that'll be okay for a trade. And as long as the dollar stays soft and the euro stays strong, that should also be good for real estate and tourism. And I think that's why you've seen a lot of those stocks performing well. As for the dollar being weak, you'd think it would help gold. It is definitely not. So if the dollar starts rallying, you're going to have some big problems in gold. Gold now has 3 days at a reference level, 3 trading sessions. So I either like it long above the 3-day high or short below the 3-day low for further pullback. So that's my take on gold. I think a lot of the people who used to speculate in gold are now all up in cryptocurrencies. They're either instead of huffing gold dust, they're huffing bags of Ethereum. So as far as Bitcoin goes, that's the one I've been talking about, GBTC. They have this this trust or whatever that trades, and you could use it on the platform. You're still in a consolidation. It has broken the wedge by time now to the upside, but it is still sort of stalled. I need to see this now clear for a long above 470 or for a short below 297.50. All in here is now, in my view, just sort of guessing. You need to see it. It's now compressed. You have lower highs and higher lows. I need to see one of those directions break for the eventual move. And why bother guessing which way it'll do? Just go with when it does. Something interesting happened today also in a couple of earnings. There's been a couple of earning stocks, and I have a feeling that next week, by the way, starts earnings. That this season of earnings, there's often earnings seasons that are inside expected moves or outsized expected moves, and I think we are going to be an outsized expected moves type of earnings situations, particularly if the moves are to the downside. And I think that because if you take a look at stocks like O'Reilly Automotive, put in a big rounded topping pattern and is now actually first coming into some interesting support levels. But I mean, that thing was down ginormously. I think it was like 20% yesterday. So speaking of O'Reilly, I'm actually looking now for an opportunity to get long via short puts. The 61.8 and a big gap fill are roughly in line around 157.36 to 158.59, and then there's the full range low at 146.20. So into that area, if there is further decay in price, I'd be looking to sell some out of the money puts because I don't think that this, and there's also primary trend, which is right below in the 130, 134. So I'd probably be looking to sell as close to 107 strike puts as possible. That was the big breakout. Maybe longer dated ones. If you're going to go shorter term, you want to be right up in that area, probably in the 120s maybe. I'd have to see what the puts are going to look like at the time in terms of how juiced they would be or not. I mean, this is not a biotech stock and it's not Tesla, so there might not be all that much juice. What I would consider also doing is maybe selling the same week out of the money or at the money or near the money puts, just because I'm very confident in those levels that there'll be some type of a bounce. So if you're looking for longer term, I gave you the strike. If you're looking for shorter term, you want to be kind of right up in there to take advantage of the price and the IV crush. One that isn't acting very well is this Costco. It basically opened on the high today and then sold off. I had shorted puts into the 50% fib and that reference low of 157.10. It's not looking particularly good. It's basically bear flagging. If there is another leg lower, 153.30 is a big level, and then of course the gap fill is 146.85. Somewhere in that zone, I'm going to probably try again to sell some out of the money puts. I think this area could, believe it or not, still hold, and there be a rally up. And that if you were to rally up and get to, like, let's say 172, we could be forming a head and shoulders, a big head and shoulders in the chart. So I'm looking to get long this for a bounce. Ultimately, I think lower, but short term, I think we could see some type of relief in Costco, and particularly if we were to come down a little bit more. So that's my take on Costco. Some of the financials are acting well. They like when rates are rising. You have a bit of a double top in XLF at the moment. It's a lower high, but it's I don't know that we necessarily are going to stop here. It's in a consolidation mode here. So I've been playing this with short puts in a lot of the names like JP Morgan and stuff, and I think that that's an opportunity on any pullbacks in this to sell more. Today we did what I thought we would do. We got a new high, but we closed with a doji, and I had said that I thought that we would have a hard time sustaining a break out of the highs because we came up from the bottom. So any pullback, in my view, in JPM now to, let's say, like 89.46, I'd be looking to sell some out of the money puts again. I'd be adding to that position there, and I'm peeling off now into strength between 94s and 100. That area, I think, is going to be the area to kind of book some profits into. But the pattern looks very good. The 1.618 fib extension is 99s, and the channel high is basically into the low hundreds. So I like the idea of selling puts into pullbacks. How's Goldman Sachs looking? By the way, Goldman Sachs, their downgrade of Tesla to me was stupid because they lowered the price to 180 from 190, and they've been bearish on Tesla the whole time. So they don't exactly strike me as the axe in Tesla. So I think this was more a function of the stock just having run a lot and needing a bit of a pullback. Goldman is stalled basically right on the 100 MA here, and has been finding support at the 200. So I think you could, be long at, pull back to like the 50, 200 MA area, that confluence. And then I'd be looking to book profits on rallies. This has been not acting as well as the others, so I'm not as bullish on this as I am on, let's say, like JPM. And then I also, I'm a big fan of Morgan Stanley. I think that they're actually a better franchise at this point than Goldman Sachs. There, I said it. Some of the pay services have been getting a lot of note lately, like this PayPal and Square. I'm long both. I'm short puts in both, but I've been peeling them off into the rallies. They've run a lot, and these would be some of the first ones I'd be looking to buy back into on larger stock market corrections. There's a gap in Square around like 18. I don't know if we're going to get that low, but the 50 MA is rising. I think you could be long as you're above the 50 and as long as this like 2241 area holds. Below 2241 and below the 50, I'd probably be looking to stop out and maybe even put on some put ratios, meaning buy puts and selling like 2 times out of the money, or do put flies. I also like that for that type of a play. PayPal, I've said a bunch of times, book profits into 55s. I'm not changing my tune on that. Any larger correction in the stock, and maybe we'll get it on earnings, I don't know. I'm looking again, lay them out again, and sell more puts into that. Longer term, I think those stocks have a hell of a lot more to go in the upside. But short term, they're way overbought. The one that got this sort of started was Nvidia, and that had some decent relative strength the last couple of days. Keep an eye on Nvidia and Amazon tomorrow in particular. If they're leading the charge on the upside, I'd say it's got more legs to it. If they're leading the charge on the downside, it's probably gone to hell and we're going lower. At some point, I don't know when, and I'll say this, that this thesis doesn't come into play until a 50 MA is lost, but the 100 MA is conveniently close to the 121, 119 to 121 area breakout. And a retest of that area to me would be a great opportunity to sell out of the money puts at or below the gap fill strike, which is 102. So we'll see how that plays out. Again, as long as if like there was the 50 MA is the key. If there's a touch of the 50, I guess you could try right out long. But down closer to that 100, I would be very more aggressive into that situation. All right, I think we covered a good amount. Maybe we'll do GE. We'll end on GE because I've been talking about that. So a couple of days ago, I had talked about GE, and I said that I thought the stock was going lower and that I wasn't interested in buying it until it yielded about 4%. No surprise, the stock is lower. It's now at the 50% fib of the entire move, and there's a gap fill at 25.47, and there's a 61.8 at 24.58, and the trend, the bottom of the channel, if it were to get there tomorrow, which it probably won't, is down close to $23. Anywhere in that area, I am looking to be selling out of the money puts. This has a head and shoulders and a rounded top and all that business, but longer term, I think that this stock will be a good dividend payer, and I don't think it's going to hell in a handbasket, at least not here. So I do think that there could be a little bit more down, but once we start breaching into, like, let's say 24s, I'll be interested in selling puts. So a little bit more down, I think, is possible in GE, but then in that area, I am looking to be I'm looking to be a buyer. I think that dividend will be safe, and I think that would be a good area to buy the dip. I think we covered a good amount. Let's just once again just reiterate tomorrow's game plan, particularly in SPY. If we are weak tomorrow, we'll be targeting the 100 MA, possibly a little bit lower. If we're strong, we want to see it clear and hold the 50 MA. If it can't, that would be a short point. So there's a few opportunities tomorrow. There's either going to be, these are the four scenarios: a gap and go higher, a gap and go lower, a gap and crap, meaning the gap's up and then we go lower, or a gap down and a flop and pop. So be on the lookout for all of those. The opening 15-minute range is key. The market internals are key. And whether or not we are above or still below the 50 MA is key. Anything below the 50 MA, I've said it before, I'm going to say it again, I think the 100 MA is in play. If you get back up above the 50 tomorrow and sustain it, then I think we could start filling in that gap back up to 242.77 and maybe even the channel high, which if it happened tomorrow would be 244. I don't know if that's going to be the case or not. I think a lot of stops for shorts are above today's high of day. If the algorithms want to take it up, I think that will be an interesting long right entry. And I said if we do take that trade, we would use then the 50 MA as the stop. So those are the game plans for tomorrow. Let's see how we do. 830 is the jobs number. I'm just looking also at the Russell. That closed below the 50 MA today also on a honey of a gap and go, a full true gap down and go to the low side. That breakout is the 100 MA, again, right below here, right at 138, and the 50% fib is 137.65. So if there was a move down into that area, I'd probably be looking to sell same day. Like if there's a gap down tomorrow, I'd be looking to maybe sell some same day out of the money puts in that. Maybe have to see if there's any juice in the 136s. That's the 61.8, by the way, the 36.41. That's my game plan. I'm curious to just see, while I'm on with you guys, what the OI looks like. The expected move, oddly in SPY, is only $1.35. Where do we have the most open interest? Let's take a look in the puts and the calls. So the calls start getting beefy around 242s, which would be the gap fill. And then the puts start getting juicy around 240, which is right here. This isn't really telling me a ton, to be honest. Maybe we do have a compression of range and we wait till next week to sort of resolve. That would be sort of like the most annoying, right? I was sort of hoping for there to be a big strike that like stuck out like a sore thumb here, where I would say we can easily target. So there's really not. There was a lot of volume though in the 240 puts today. I'm just looking at that. There was almost twice the amount of the OI, but we won't know whether that was a buy or a sell until the morning. Same thing in the 242s. So we could be collared off. That would be interesting if we are collared off tomorrow, just to sort of like, this is a week with, and I don't want to just sit here rambling on and on, but I'm also factoring in that this is still a holiday shortened week, and a lot of the big boys aren't on the desks. They're being run by interns for the most part. So maybe we have to wait until next week for there to be a more serious approach to direction of the market. That was sort of my thesis coming in this week, that I thought we would be like sort of sideways to down and not really do all that much. And then next week would be the more of the decision. So I think, believe it or not, we may have to wait until next week for true decision, but I am going to be keeping like an eye on those setups that I said. Anyway, if you missed this video, it's going to be on my YouTube shortly. And I like to also spend a little time giving you guys my insight, how I think about setups and how I think about trading, because this is really what I try to impart. You know, maybe one day I'm not here. God knows, I could be hit by a bus tomorrow. At least you'd have the ability to know how, I think. So that's my scoop. If you missed this broadcast, I'm going to try and edit out the point that, I had to do the reset on the computer. But it'll be on my YouTube channel, which is Justin Pulitzer Trades. If you like this video, please retweet it. That's the best way to say thank you. Have a great rest of your week. I'll see you on Sunday in my weekend video, and I'll be tweeting real time about which scenario is playing out tomorrow. Cheers.